Hey everybody, good morning. I'm Lee Seiler and welcome to the Seiler Wealth Management video blog. It is Tuesday, February 23rd, and the first thing I want you to notice is a good friend of mine, Pete, explained to me and gave me some solutions on how to flip my numbers around. So now they should be not a backwards 2 that look like a 5 and Merino, and they're all straight. So good stuff. Thanks, Pete. I really appreciate you showing me how to do that, okay, because I'm kind of MacBook illiterate. But anyway, let's talk about the markets. We had the first up week of 2016. Unfortunately, it came halfway through the month of February. However, the good news is, and we talked about this 2 weeks ago, I encourage you to go back and look at my videos because it's not always you could say, hey, I was right, spot on, but I was right and spot on this. The markets needed to have a retest of those lows that had occurred earlier in the month. It did that successfully about 2 weeks ago on a Thursday. And it had the form, remember that W base, where I told you stocks will come down, come back up, go down again. And once it breaks the top of that W base, typically a bottom's in place. So what I think is the bottom's not necessarily in place yet, but I do think the low has been had for this cycle. Doesn't mean after we rally back up, we'll hit that low again. Anything's possible. But for now, I think that you can start nibbling at some opportunities, and we've done that over the last week or so, and I'm really happy that we did. We bought several stocks that I thought were at really reasonable prices and businesses that I wanted to own for our clients. Okay, so that being said, I had a question, which from a brilliant person who is actually a surgeon, and I had dinner with him a week ago or so, and we had a conversation. And the surgeon had he really had a great question, and I've addressed it in these blogs before, but I don't know if you really understand it. He asked, why does oil in the market, why are they trading in correlation? Why are we seeing that when oil's down, the market's down, and oil's up? Because typically you would think lower oil prices translate to lower gas prices. That would translate to more money in your pocket. We've all basically, it's like a tax cut for us, which is true. I mean, look at how much it takes to fill up your gas tank now. It's a lot less than it used to. So why is that bad for the economy or the market? Well, it's a tremendous question. As oil is coming down, remember we had a high of $120 a barrel, and then we just dropped down recently to the 20s, $27 a barrel in oil. That's great for the consumer. It is really terrific for us. We have extra money in our pocket, and that's why stocks like Walmart started out the year pretty good, because you have that extra money, people spend it, they go to Walmart, okay? However, at some point, you have to look at the macro situation, not the micro, not each individual family, but the macro situation. Lower oil, who is it damaging? It's damaging our domestic oil companies. So, and I know you probably say, who cares? They have billions of dollars. True. However, when the oil sector in general used to represent about 20%, almost 20% of the S&P 500. So the biggest index, our benchmark of the stock market, the S&P 500, used to have about 100 stocks. I mean, really represent 20% of the value of the S&P 500. And now it represents less than 10%. That's because the value of those stocks have been cut in half. So what's happening here? Now you have a big chunk of the S&P 500 being dragged down by one sector, not dragged down by 5 or 10%. We're talking dragged down by 30, 40, 50, 60, 70%. So it dragged the whole index down. So when you have the whole index being dragged down, you start looking at the market as a whole, and people say, wow, the market's doing horrible. Well, yes, and the market has been doing horrible. A lot of it with the oil stocks. Yes, it followed by a lot of the other companies out there. But now what we're seeing is that oil is firming up, and the oil stocks, maybe you're getting a little bit of a play here, thinking maybe the worst is over. But keep in mind, there are a lot less oil rigs, our oil rigs, in the Gulf Coast, in the Gulf of Mexico. So it's really affecting our production of oil. And we were just about oil independent until all this started. So let me take a step back. S&P 500, the major benchmark of the stock market, has a huge part of it in a major bear market. Drags down the whole index. When the index gets dragged down, you look at your 401ks, you look at your statements, you look at your IRAs, and all of a sudden you're down 15, 20%. All of a sudden you feel a lot more poor. All of a sudden that bigger house you're going to buy, or that commitment to buying a car, maybe you don't feel so good about that. So it really is a domino effect. when one sector is in such a bear market or in such just horrible shape, it really drags everything else down. So now that we see that the oil stocks are firming up a little bit, now the S&P has some room to run. Now the next sector we need to see participate are the financials. The financials represent high teens, 16, 17, 18% of the S&P 500. And I do believe the financials are going to make a move at some point here. As soon as we get interest rates start to tick up, which we haven't seen, that'll be great for the financials. Okay. Now, that being said, we have an event on March 1st. A week from today, it's Investing 101. So if you are, this is really for the novice, okay? We're really going to make it for the novice investor, really get into stocks, definition of stocks, bonds, mutual funds, some basic financial planning. If you have a 401k, if you're not sure what to do with your IRA, some tax ideas, feel free to come. We really limited. I think we only have now a couple more seats left. It is a week from today, March 1st, and we're holding it right here in our conference room in our office. So it's a small group. Actually, really, it's going to be 6-8 people, and we're going to go over questions and have a little presentation for you about really what trading is like and what to invest in and how to invest and how to get started. So it's really interesting. Call the office. I'll post the number here on my video, but it's a week from today. Also, on March 15th, 2 weeks from today, no, I'm sorry, not 2 weeks today, 3 weeks from today, we're going to have the Women Investing workshop. So I will make sure you guys know about that. This will be a good one to be specifically for women. Sorry, guys, no men allowed. Also, I'll be drawing 2 more cruises. That'll be on Thursday. Thank you guys for sharing the video. If you share the video, you get 2 entries. If you like our video or like the Facebook, it'll be 1 video. In the meantime, if we can help you with your IRAs or 401ks, I know a lot of people are changing jobs right now. I'm seeing a lot of that going on. Your 401ks are stuck there at a firm. We could do a lot better than having them stuck in someone's 401k. It's usually a lot more expensive as well. So give us a call if you're transferring jobs, leaving your jobs, been let go, unfortunately. Sorry, but let's just talk about your 401k. And then also, our newsletter is out. It's hot on the presses, the digital presses that is. Go to our website, stockdr.com. Check out the newsletter. It talks about last week's action and what's coming up this week. All right. In the meantime, thank you very much. If you have any questions, contact us. We'll see you guys a week from today at our workshop. I'll see you even sooner than that on Thursday's video blog. Let's have a fantastic day.